Value Trades.
Good afternoon or good morning or good night, wherever you are. Welcome to Value Trades and our webinar on gold, trading the precious metal. When Graham Watkins asked me to do this webinar, it was a few weeks ago or maybe even months ago, and things were sort of normal. I am looking forward to giving this presentation and talking you through how to trade gold and which way is up and what to look out for. Things have changed quite a bit in the last few weeks, and some interesting things even today have happened with gold, and it's quite interesting and obviously quite frightening. I don't know about you, but I sometimes feel like I'm walking through a science fiction film, but we are still trading. The markets are still carrying on as best they can. If you've been following the indices, it's been a rather interesting ride, and it's been especially interesting for gold. Gold normally is simply a safe haven that may or may not react to geopolitical events, and it is behaving rather interesting lately. And we're going to go through why in the next hour or so. And I encourage you to ask questions as we go. And hopefully, if you're watching a recording of this video a few months from now, you're wondering why we're all so freaked out. Well, hopefully, we will have the opportunity to look back at these days and either laugh or breathe a sigh of relief. Let's get going and see what we can come up with. Yeah, my name is Brad Alexander. I've been working with Value Trades now for probably 5 years, doing various things, and I'm going to just quickly zip through a screen here. And I've been a trader, retail and professional, for many, many years. I used to trade the hard way years ago. In fact, people ask me, how long have you been trading? I say, I used to trade the peseta. If you don't know what the peseta is, just Google it. And we used to do it the hard way, simply by bank transfers. So I've been in love with trading all my life, trading my own accounts, trading funds accounts. I've traded for American hedge funds. I've traded for Malaysian hedge funds. I spend most of my time these days providing content, and you may know me or know my voice from the Monday morning market blast that Value Trades puts out every Monday based on fundamental analysis, and of course on Tuesdays based on technical analysis. I wanted to bring that up right now because I used to tell people that doing technical analysis on Forex and indices and commodities was quite easy, and fundamental analysis was trickier. Well, things have changed in the last little while, or last long while, between coronavirus and Brexit and our friend Donald Trump and the US-China trade deals. Fundamental analysis is quite critical, and technical analysis sometimes can be a bit tricky when the markets are bouncing around like they are now. Sometimes chart patterns that we'll talk about in a few minutes are simply obliterated by fundamental events that just take us by surprise. So being a trader these days, you need to have your wits about you. You need your risk management, which is critical at all times, but it's even more critical now. And sometimes a bit of luck. We don't like to talk about gambling when we're trading. We do not gamble at all. But once in a while, a bit of luck can't hurt, I'm sorry. I've worked over the years for Value Trades is, I think, probably my favorite client. I've been doing lots of things for Graham and doing quite a few videos over the years, including blogs. I work for educators and I work for fintech. So my lot in life is to do things like this. And I love educating people, new traders. I've worked with hedge funds and educated them on various indicators. It's all been good fun. And again, I'm glad that Graham has asked me to come along tonight and talk about gold. As a professional trader or a retail trader, some of my favorite trades have been on gold. And I'll explain why as we go. It has some advantages and has some disadvantages over Forex. And let's take a look at our agenda. So one of the things we wanted to talk about firstly is trading commodities versus Forex. I mean, if you're a Value Trades client, and if you're not, you should be, you'll notice on the MT4 you have a few different varieties of commodities. You have gold, you have silver, I think you have platinum and palladium. I'll take a look. And of course you have oil. Oil is another topic for a different webinar. The difference between commodities and Forex, basically the underlying asset is very different. But they actually can behave in the same way, because we need to think in pairs. Simply, if you're trading Forex, you're trading Aussie dollar, trading dollar CAD, Kiwi CAD, whatever, you're thinking in pairs. Well, commodities are not that much different because you can't trade gold on its own. You need to pair it with something. And Value Trades, as we will see, has both US dollars and euros as its corresponding counterpart, as its quote currency. Okay, we're going to look at swaps and spreads on gold. One of the nice things about Value Trades is that they will actually pay you to go short on gold against the American dollar. Not many brokers do that. And the spreads on gold, one of the things I've noticed over the years is that the spreads can be more stable on gold. So if you're a news trader, and I'll get into that in a little bit, it can actually be a bit safer trading gold against the news. All right, technical analysis of gold. Well, to be honest, technical analysis on gold is really not much different than anything else. We still have all the tools available to us on the Value Trades MT4 website. We have Fibonacci, we have Bollinger Bands, we have stochastics and MACD and all the rest. And I'm a personal fan of chart patterns, and I'm going to go through that in a little while. Triangles, pennants, double tops, double bottoms, triple bottoms. They're all lovely, and gold reacts very well to these chart patterns. Fundamental analysis on gold, as I mentioned earlier, fundamental analysis is critical these days. You really need to keep an eye on what the central banks are doing. I know our friend Donald Trump very often catches us off guard with his tweets. That's fundamental analysis, but there's not much we can do about it when they come roaring in the morning. Obviously now with coronavirus, fundamentals have been changing every minute of every day. And we're going to talk about what the American Fed is doing, the central banks are doing, and how that might affect the price of gold. So we just talked about that. Gold and central banks is a critical, and I've been doing research on gold for many years, and I'm going to reveal a few, not really secrets to you, but show you what may or may not be happening with gold in the central banks. And again, I talked about coronavirus. I did not want to make this webinar about coronavirus. When Graham asked me to do it, it was well before we even thought about this. But whether we like it or not, it is now part of our lives and certainly part of our trading lives. There's no way to get around it. Right. Supply and demand. Again, everything is supply and demand. Everything moves based on supply and demand. Gold is no exception. And there are two things we need to look at with gold. And one of them is the actual use of gold. Gold obviously is used in a lot of electronics, high-end electronics, jewelry, and so forth. But mostly it is used as an investment, and it is one of the safe haven investments. You may hear us talking about safe havens, and we generally talk about the Japanese yen or the Swiss franc and gold. You may have noticed very often that when something happens in the world, an oil tanker gets seized by Iran, or there's a bombing somewhere, the price of gold will shoot up. And that's because it is a safe haven. It can react very, very quickly. Sometimes it's far too quick for traders to get involved, but there are a lot of opportunities to get it on the way back. So that's one reason you need to keep an eye on the news, and gold is one of the ways you can actually capitalize on that. Gold versus other commodities. Gold has been a standard of commodities for many years. And one of the reasons that we look at gold versus other commodities is to gauge what the market is doing, what the economy is doing. And again, before coronavirus, I had a whole thing planned on gold versus silver and how the ratio of gold to silver had been increasing dramatically, which, to be honest, is not a good sign. Well, right now, the ratio of gold to silver is off the charts. And that is simply because of coronavirus, and we're going to end the webinar talking about that. Right. So commodities versus Forex, we talked a little bit about already. And again, Value Trades offer gold, XAU USD and XAU EUR against two different currency pairs. And why is that important? Again, what you need to think about as a Forex trader is trading in pairs. You're not just trading gold, you're not just trading silver, you're not just trading oil, you're trading the commodity against a currency. There's no other way around it. So what I'm trying to get at is that the underlying quote currency will affect the price action on this chart. Simple as that. If you've got a euro event, it's going to affect gold euro. If you've got a dollar event, it's going to affect gold dollar. It's that simple. So it's easy to say, oh, the price of gold has gone up or the price of gold has gone down, but it may be a reaction not just to the price of gold, it may be a reaction to its counterpart, the quote currency, euro or dollar. And we're going to illustrate that as we go along. One of the things I like to do as a trader is to trade the news. And I've brought this small chunk of calendar up to show you. And the reason is we've got two different economies on this, on the Value Trades economic calendar, and they're showing US dollar and they're showing euro. Anything that happens on this calendar, and we see simple things like we see every week, pending home sales, FOMC statement. In the euro, we've got quarterly GDP. Of course, that's going to affect the currency. It's going to affect the US dollar and it's going to affect the euro respectively, but it will also affect the American dollar news events will affect gold dollar, and the euro events will affect gold euro. And this is where you can use gold to trade news events. And again, I'll show you some examples as we go along, and I'll tell you my strategy for trading news. Okay, one of the things that you need to look at, and if you go onto your MT4 chart onto any pair and right click and ask for a specification, you will see this. And this is probably the most boring slide I'm going to show you in the webinar, but I'll get through it quite quickly. And one of the things you need to look at, and I'm going to find a pen here to write with. And I spoke earlier about it, and that's the swaps. Well, if you go long on gold, you're going to be paying a swap. And this is not a bad price. Value Trades is quite reasonable when it comes to spreads and swaps. But one thing they will do, if you go short on gold, they will pay you. They will pay you $3.17 per lot every Wednesday. And I have personally done short trades with Value Trades that have gone on for a month and a half and have actually made about 1% of the account just on the swaps. It's not a tremendous amount of money, but if you like carry trades, then you can actually make a bit of money doing that, along with proper risk management and proper trading. You're not going to offset your losses with swaps, but you can augment your winnings with swaps. On the other side of the coin, if you go too far into the woods on a long, you're actually paying a premium. You're paying swaps to do that. On gold euro, your swap on shorts is negative, but your swap on longs is actually less than on gold dollar. So it's something to keep in mind when you're looking at which items to trade, which symbols to trade on longer term trades, on position trading. And of course, all the other specifications are here, the margin requirement and the minimum maximum that you can trade. And Value Trades is pretty good on these things, I can tell you from experience. Okay, just to illustrate that, on the 18th of the month, I opened a position long and opened a position short, 0.3 lots on each. And this is a demo account. I'm not that stupid. Just to illustrate what can happen. So basically, I went long on one trade and went short on the other. And beautifully, we have, and this is on gold dollar, a $2,600 profit on the long and a $2,600 loss on the short. And the swap is $3.50, and the swap on the long is minus $17. So this is where you need to keep this in mind if you're going and doing position trading. And the commission was, $1.50, so that would be $4.50 per lot one way, which is quite reasonable. And just so you know, if you're not familiar with it, if you are trading Forex, I'm sure you've been through a million webinars and videos on spreads. The spread is calculated a little bit differently on gold in that it's not looking at pips, it's actually looking at cents. Take my pen away. Okay, what I'm going to do now, let's talk about technical analysis. And what's nice about Value Trades, they have some interesting videos on technical analysis, and I'm going to go through one now. I actually made the video about probably 2 or 3 years ago, and what I'm going to do now is simply switch my screen. Yep, here we go. You can find this video on the Value Trades website, and it is basically looking at technical analysis on almost anything, and it's specified as triangles and pennants. And the reason I want to show you this now is because when I made the video, I used mostly gold as an example. So I'm not going to run the video, but I'm going to go through it. I'm going to scrub through it, as we say. And basically what I wanted to show was that technical analysis works equally well on gold and commodities as it does on Forex. And here we have the formation of a, oops, excuse me, let me go back a bit, a descending triangle. So what we have here, and this was done in June of 2016, basically price had gone up from, and this is the good old days when gold was $1,255. So it went up about $50 in one day, and it started to consolidate within a range. And I love chart patterns, and I see this coming. So when you see a pattern like this coming, it's a consolidation pattern, obviously. You've got you've got support at the bottom of 1310, and you've got lower highs carrying on for what looks like a few months. Basically, when you see chart patterns like this, this is a graphic representation of buyers and sellers having a war. So when prices are getting lower and lower and support is getting stronger and stronger, at some point something has to give. So if you're paying attention and you have your wits about you, you can catch a trade like this, either get it off the bounce, off this upper trend line, which obviously would have been a good trade on either of these points actually, or beautifully get it as it breaks through support. And we broke through the next key level at 1301, psychological level of 1300, and this trade carried on down to 1255 over the next, it looks like about a week. So if you made, and again, this was a trade that was obviously 4 years ago, but the principle remains the same. And I'm just showing again chart patterns. Let me zip through the video a little bit. Okay, and here we have a similar situation. During that same year. Again, when you see consolidation like this, it simply means the battle between buyers and sellers is carrying on. And if you can catch the break out of this trend line, whether it's to the downside or to the upside, then you've got a good trade. In this case, we call this pennant a bullish pennant. And the reason is price entered it from below. And typically price will carry on in the same direction that it entered. Not always, of course. Let me move on to another descending triangle. Okay, I'm going to move through it a bit. If you find this video on the Value Trades website, I go through all the different types of patterns. We have bullish pennants, bearish pennants, descending triangles, and falling and rising wedges. Falling and rising wedges are one of the most accurate chart patterns that you can find. They very rarely go wrong. Okay, and here we have another situation. And if you find the video, you can see I'm drawing a pennant here. And let's see what happens as we move along. We have a gap. This is one of my favorite charts of all time. Let me stop it right about here. In fact, I'm still kicking myself. I was trading and I found this chart pattern forming, and I was being a good trader. I was keeping track of all my trades. I went on my spreadsheet and I made a note to myself on my journal. Check gold on Thursday. Well, guess what I didn't do? I didn't check gold on Thursday. I came back on Friday, and lo and behold, we had the most amazing gap in the history of trades. Well, we also say to ourselves that gaps will get filled. Well, the reason I like this chart was because it shows a beautiful combination of fundamental analysis and technical analysis. Technical analysis, obviously, because we're looking at this pennant, and fundamental analysis, because if you can see my cursor here, this is when Russia invaded Ukraine. And when that happens, when we have geopolitical events like that, the price of gold shoots up. And that's exactly what happened. And to be honest, I missed the trade going down, but I caught the trade going up, and I closed it somewhere about here. So it was at that time, it was the biggest trade of my life, and I was quite happy about it. So again, if you're seeing huge fundamental events like oil tankers being seized or wars breaking out or even invasions, you can take advantage of quick movements on gold. And in fact, you can see that this particular movement lasted several weeks before it tapered off, but it carried on until the middle of July. In fact, there was a case, I think it was about 5 years ago, where the Interpol was looking for some bombers. And I'm sorry, I honestly forget the case. And they caught 2 of them, and there was the 3rd one at large. And the news came out saying that they'd apprehended the 3rd bomber in the Brussels airport, and the price of gold dropped. I was actually showing a friend, and suddenly the price of gold shot up again. And the reason that happened was because the news story was a hoax. So the price of gold dropped based on good news, and suddenly the world realized that the news was incorrect. The price of gold shot back up again. Funnily enough, I tried to find the story to show my friend, and it had been erased from from Bloomberg, from CNN, and from Sky. The story was gone. But gold did react rather violently based on, as our good friend would say, fake news. So these things do happen. You have to be careful with these. And again, here we have a case where we would call this a bearish pennant, because the price of gold came in from up above. It was bearish on the way down, and it exited the pennant on a bearish run. And again, the reason it went back up was because of a fundamental event, which again was bad news with the Ukraine being invaded. Okay, here we have another situation which is very, very similar. Price came in to a descending triangle. Descending triangles, however, there really is no such thing as a bearish or bullish descending triangle. It could go either way, because when we're looking at serious support like this, if it breaks, in this case it did, and it nicely went back to its previous levels, it could easily have bounced up and gone through the upper trend line and carried on. And that's what you have to watch for with ascending and descending triangles. Again, here's an ascending triangle. Price tried to break through 5 times, and eventually it bounced off and went back the other way. So in this case, it did not break resistance. It actually bounced and went back down, but it was still a very clear pattern, and we took advantage of that situation. Okay. As I mentioned, trading news events with gold can be very, very useful and handy. And the reason is, I like to trade news events. And the way I trade them, I do not trade news before the event. That is just, as far as I'm concerned, suicide. What I do, I wait for a reaction to the news, wait for the spreads to calm down, which in some cases can be 5 minutes, sometimes can be 1 minute. Sometimes can be 15 minutes, depending on the actual news. Hopefully one day we'll actually do a webinar based on news events. But what I do, I get a counter trend reaction from the news and trade it on the way down. For example, if euro dollar is on the, let's say the 1 hour chart or 4 hour chart is trending down and the news drives it back up, what happens is that gives the big boys, the banks, the hedge funds, an opportunity to sell again. And if the news is not dramatic, price almost always will rebound. And the reason I like to get gold in the mix is that sometimes you have reactions to the news, reactions to news events that actually go with the trend. And I don't trade those. But sometimes on gold, it will give you the opposite reaction. So if I get, again, I'm going to repeat, a counter trend move based on news events, you can get in and get back into the trade and ride it back down again. So I'm going to show you an example of what I'm talking about. Okay, this is a video that I made literally just a few days ago. And what it is, you can see there's a bit of the calendar. And this is the European Central Bank interest rate. The interest rate was not moved. It came in at 0. But that doesn't mean that a news event will not move the news. In fact, very often, if you get involved in news trading, you'll find that some of the best news events are the ones that really have no news. It doesn't always work against the euro. It doesn't always work. Very rarely works against the pound, but it is very, very helpful against the dollar, which is a massive currency. And as you know, the American dollar is a main driver of forex on this planet. So very often, if the news comes out and it is quite far off, whether it's retail sales or gross domestic product, and it's quite far off the analyst projections, sometimes the price will be driven to the point where it goes beyond recognition and it's hard to trade. If the news event comes out and it's close to the analyst expectations, sometimes nothing will happen, but often in the case of the American dollar, there will be enough volatility where you can actually create a good opportunity. So I'm just going to quickly show you what happened a few days ago. This is the 12th of March, when the European Central Bank announced that it wasn't going to change interest rates. So it's not always the case where big news or bad news will drive the markets. So here we have a situation. So what I'm looking at here is gold versus dollar, gold versus euro, euro versus dollar, and I've got the DAX on here for good measure. And I'm showing the spreads on each one. And you notice as the news event gets closer, the spreads tend to fluctuate. And I have noticed over the years that the spreads on gold fluctuate less than often Forex. Ironically, you may have got a notice from your broker today, and I know Value Trade sent one out today, that there's been some problems with the gold market, and we'll talk about that in a few minutes. So spreads were a bit erratic today. So sadly, today was probably not the best example to be talking about spreads on gold, but we'll talk about that in a few minutes. So if I just move forward in time, you can see what's going to happen. Here we have a bit of whipsawing going on before the news event. And when the news is released, the euro shot up quite dramatically, even though the news was neutral. And you'll also see, this is euro dollar, the DAX reacted negatively, because it will. If companies know interest rates are getting lower, they like that, and the prices will go up. On the other case, where interest rates they will go down, which is what happened here. But gold also moved, and the reason gold moved was because this particular pair is pegged against the euro, not pegged, I'm sorry, counterparted against the euro. So you'll find that gold versus dollar hardly moved at all based on the European Central Bank interest rate, but it moved quite dramatically on the news because it's paired to the euro. And you also notice, I'm following the spread lines here, the spreads didn't really widen very much on gold on the euro, which is very handy, because if you're trading news and the spreads go erratic, you can actually be stopped out or not be able to close your position or not be able to enter your position. That's one reason why I wait until the spreads calm down before I get into a position. These are 1 minute charts, by the way. So you really, if you're trading the news events, you need to be watching longer term charts as well, like 15 1 hour and 4 hour charts to determine the trend. You really don't want to be trading based on 1 minute chart. I just did this to illustrate what can happen during a news event. So you can see euro dollar has shot up quite substantially, tries to come back down. You may have gotten the trade by now, but you'll find that it sometimes after a few minutes will head on back up. But it did eventually come back down and resettle back where it started. And these can be very, very handy trades if you're paying attention and you have proper risk management. What you don't want to be doing is jumping into a trade hoping it's going to reverse too soon and then be stopped out 5 times, and the profit you've made on the way back has been wiped out by your losses on the way up. But the point I was trying to make was that you can use gold as that vehicle. You'll notice the spreads didn't widen very much. You notice the worst it got here was 2.5 centimes. Actually, I lie, it's about 3.2 on this one, but it's still not bad. as far as spreads go on a commodity. And again, at some point, we'll do a webinar based on news trading. And again, I repeat, I've actually one of my best trades I made last year was trading the non-farm payrolls, and I couldn't take the trade on Forex because price had gone in the direction of the trend. But on gold, it was the opposite. It actually went against the trend and came back down, and I got in on the way back down. I did, in fact, find that video today, but unfortunately, the resolution was so bad I couldn't show it to you. Let's go back to our main screen. Okay, our favorite topic these days, coronavirus. Here we have a chart showing gold from August of 2018 up until now, pretty much. And the price of gold has been going up. And it's actually been going up for the last almost 5 years, to be honest. And a lot of us have been quite curious as to why it has been going up. Obviously, as we mentioned, gold reacts dramatically to geopolitical events like wars, oil tankers being seized, bombing raids, plane crashes, all very sad, but the price of gold does go up, and it goes up almost instantly. So a lot of us have been wondering why the price of gold had not come down very often when the situations calm down. And the reason is that for the last several years, and I'll show you more graphically in a few minutes, hedge funds and central banks and banks have been buying gold. They've been on a buying spree for the last several years. And we're going to find out in a few months that that may save the economy. And I'll tell you why in a few minutes. So what was curious to everyone involved when we all got hit by the coronavirus, and here we have a chart showing gold against the dollar. But here we have a situation where gold suddenly reversed and there was a big sell-off. So why, we were asking, in fact, I wasn't asking, but a lot of people were, even the big news agencies were asking, why isn't the price of gold going up? Here we have something horrible happening, coronavirus. It's crippling the planet. It's worse than a war. And the reason is that what was happening, and if you go back to your charts and look at what happened in 2008, there was a massive sell-off in equities because the prices on obviously airlines and hotels, and now every company on the planet is losing 20%, 30% of its value overnight because of this dramatic economic influx impact we've had on the coronavirus. So why does that affect gold? Well, basically, if you're a hedge fund and you're protecting your clients and they're losing tons of money on their equities, you don't have to go too far to take a look at the DAX or the S&P 500 has dropped dramatically. And as I said, shares in airlines, shares in hotels, shares even in Apple have dropped dramatically. You need to pay for these. And if you're trading options, you've suddenly got massive premiums to pay. Where does that money come from? Gold. You sell off your gold reserve. So the reason that gold has dropped, or had dropped, I should say, from this point, and again, looking at the dates, it was just sort of a few days into March, let's say about 2 weeks ago, and dropped dramatically to this point, was very simple. Everybody was selling their gold, looking for cash, and you find at the same time that the American dollar got strong. So and as the American dollar gets stronger, it makes this chart look even worse. So you've got two things happening at the same time. You're physically selling the commodity, you're selling gold, and with supply and demand, the price will go down. Because of the economic impact of the coronavirus and what's happening with the stock market, the dollar got strong. So that drove price action down. So you've got two things happening here. You'll notice price has come up dramatically on gold, and we're going to talk about that in a few minutes. So this is a serious case of supply and demand, and it's a serious case where gold did not react. The price of gold did not go up based on a geopolitical event. In fact, it did the opposite. And I'm going to repeat, it's for a completely different reason. It was not a safe haven currency, but it was a safety valve. And we're going to show you why in a few minutes. Right, so what happened today? Well, the price of gold went up quite a bit. If you look at this chart, it's got the 23rd of March up until right now. In fact, if you give me 2 seconds, I'm going to take a look on my own on a different screen on the value trades. Price of gold now, yeah, it's actually very close to that. It's 1623. I've got 1622 on this chart, so it's only gone up about a dollar. Okay, and the reason is why? Why is that? Again, supply and demand. And it wasn't necessarily because everybody was piling back into the market thinking this is a fantastic opportunity. I've put 2 news items on the screen. You may or may not be able to read them. But basically, the left is a notice from a broker. In fact, Value Trades put out a similar notice today. And basically, because of the coronavirus, some gold mines and smelters and distributors have had to shut down temporarily. So therefore, you simply could not get the product out to the market. And when that happens, it's supply and demand. The price will go up. It's that simple. So we weren't necessarily meaning that everybody was buying gold all of a sudden the last 2 days. It was because the supply of gold became problematic, and therefore the price goes up. That is simple supply and demand. It happens with every currency, happens with oil, happens with platinum, silver. That's the way it is. The other story, which we can see here, basically, because there was which is wonderful, a massive bargain hunting on the stock market. If you saw the indices today and the individual stocks and even airlines were going up dramatically, it was quite refreshing to see this. So the dollar got stronger. People were using their dollars to buy equities, to buy stocks. So therefore, the price of the dollar actually decreased, which again drove gold dollar higher. So you've got the exact opposite of the last slide I showed you. Instead of gold dropping because of supply and demand and a big sell-off and the price of the dollar, the value of the dollar, here we have the opposite. We have price action getting higher, firstly because of a demand problem, a supply problem, and because the actual dollar got weaker. So here we have price action doing exactly what it's supposed to do. What's going to happen to gold from now on? Who knows? Again, so much of what we do right now in the markets is dependent on what's going to happen with coronavirus. And if you catch my videos on my fundamental analysis videos for the last 2 or 3 weeks, I've said the same thing. The appearance of a vaccine for coronavirus is going to affect the markets dramatically. They always say, buy the rumor, sell the fact. Well, even a rumor about a vaccine will help the markets. If this problem carries on too long, for example, if our global economy is shut down, restaurants, airlines, hotels, people can't go to work for the next few months, then obviously the planet will have to reassess the way we do things, the way we conduct business. And I hate to speculate on what the results might be. Okay, getting back to the overlook on gold for the last several years. Here we have a chart, and here we are again. How about that? Here we have a pennant or a descending triangle, which popped up nicely. This is a weekly chart, so every candle, if you know trading, every candle is 1 week. And what was happening for literally several years was the price of gold was dropping. And again, it was a supply and demand issue, and based on very few military conflicts and so forth, the price of gold did drop to around $1,000. It looks like in the end of the end of 2015. So suddenly the prices started to go up, and we were all very curious as to why. And again, you can see here's that same pennant. I know I'm probably getting sick of seeing this. This is that same descending triangle that I'm pretty sure this is the same one that was affected by geopolitical events. In fact, you can see here, this spike, I'm pretty sure, was the American election. You can actually trade things like that. But what was happening was the price of gold for many, many years kept going up. And a lot of us were curious as to why the price kept going up when there were very often no reason to jump into safe haven investments. Well, doing a bit of research about 2 years ago, I found out why. Basically, central banks have been buying gold. They've been on a spending spree for quite a long time. And we may find out in a few months that could be the thing that saves the global economy. So, and you can see by this chart, and if you go on to, there are a variety of, in fact, this chart came from a site called gold.org, believe it or not, and it's basically the Gold Council. If you see here, this is, and you can actually go onto this website and actually pick countries. And I found out literally a few years ago that a lot of countries, central banks were buying a lot of gold, and Russia was one of them. And if you look at this spike here, we have China and Russia ramping up their gold purchases. So basically, when someone's buying something, it doesn't matter if you're buying gold or buying a bicycle. If people are buying a lot of it, the price is going to go up. So this carried on. In fact, you can see here that Russia has been buying gold for a very long time for their Federal Reserve, which tells me, and I'm just speculating on this, the reaction of Russia to the oil price war right now has not been very pleasant, but it's entirely possible that they feel they have enough reserves, obviously with oil and gold, that they can weather the storm. The timing of the Russian Vladimir Putin to do this, to create a price war with the Saudis, is extremely bad. It really doesn't help us with the coronavirus going on, but sadly, there's not much we can do about that. And all we can do is hope that gets sorted out, because the oil business is in a bad enough shape based on the coronavirus. So basically, again, supply and demand. You have a lot of central banks buying gold for many years, driving the price up. Here I have a list. I've stolen a list of all the central banks around the world and how much gold they have. And you can do your own research on this. The Americans have always owned a lot of gold. You hear stories about Fort Knox, and their currency is basically backed by gold, which is a very good thing. I remember years and years ago doing business in South America. I'm talking in the 1990s, and I remember the Brazilian real and the Argentine peso. Their central banks tried to peg the value of their currencies, Argentina and Brazil, to the American dollar. And it was a fruitless effort, because the American dollar at the time, and still is backed by lots and lots, and in this case, 8 metric tons of gold. Do the math, it's a lot of money. Brazil and Argentina did not have that luxury. So when they tried to peg it, it ended up in disaster. They simply couldn't do it. The economy crashed. Interest rates in Brazil went to like 55%. It was just craziness. So hopefully no other bank is going to try and do that in the near future. Central banks, doesn't matter what country you're in, they have their own mechanisms for doing things. And you can go down this list and you can find, and I did remember central banks like Kazakhstan have bought in quite recently. The United Kingdom, I'm not sure if this figure is correct. I think the United Kingdom own a lot more gold than this. And again, if you go on to the Bank of England website, there's quite a lot of information on how much gold they own. Okay, one of the things we wanted to talk about was ratio of gold to other commodities. Well, this chart right now is almost pointless. Before coronavirus, there was a good point to it. Over history, when the ratio of gold to silver increases, it was not a good sign. Basically because the price of silver very often will follow the price of gold, but 50% of silver is actually used in production. It's not necessarily an investment, whereas gold is much, much more important as an investment. And as a safe haven, if more investment money is going into a safe haven, then the economy sees that as not necessarily a good sign. So if the ratio between gold and silver gets too high, then we say, hey, that there may be a recession coming. Well, coronavirus has fixed that for us. As you can see, when the ratio got to 90, people were starting to worry. It did drop down earlier this year, but came back up, and now it's around 120. So it's almost a moot point. But in the future, let's hope we'll be able to look at the gold-silver ratio and be able to make some sense of it, and not have to worry. So again, the gold to silver ratio. There's also the gold to copper ratio, which is very, very high. Copper, as we all talk about, Dr. Copper is a fundamental barometer of the global economy. Price of copper actually has been going up a bit, which tells me somebody's making something somewhere, which obviously is very important to our global economy. And the ratio of gold to copper, again, has gone through the roof. But that is more to do with coronavirus than anything else. Right, let's take a quick look at, I'm going to change screens again. And we'll look at the value trades MT4, and we've got gold. One of the things that I like to do as a trader, and you've probably seen it in my videos and instructional webinars and so forth, is look at the ATR, and that's average true range. And ATR is generally the thing you look at to see what's happening with the markets. I learned about ATR years ago when if the markets aren't very volatile, they become very, very boring and flat. You need to change your strategy. You need to maybe get into longer term. The ATR is quite a good thing to let you know where the markets are at. And this is quite disturbing. If I put the ATR on gold, you can see that it has gone from a very, very steady true range. I'm sorry, let me just get this here. Of about 11, 6 and 11, up to $69. That's an incredible amount of range every day. And you can see why. I mean, generally, if you've got trends happening like this, you can actually trade these. If you're a trend trader, you can see a nice downtrend. You can, and again, the trend is our friend. If you want to trade this, you can go up and down, get bounces off the trend lines and so forth. And during these days, I'm looking at the chart now, this is from August of 2019 up until November 2019. It was actually quite reasonable to trade this based on the daily chart. If I want to zoom out to the 4-hour chart, and oops, try and find that again. Sorry, it's gone. I've gone too far. Anyway, I'll leave it here. You can see that the trend was, the ranging market was quite, I wouldn't say easy to trade. It's never easy to trade, but fairly reliable until we had a breakout. And again, probably getting sick of hearing me talk about this. You've got pennants happening all the time. In fact, even very recently, if you caught my last Market Blast video, we had here, let me get rid of all these indicators. We had a wonderful double top happen, and it worked out quite well very recently. You may have been scared to trade this because of the current circumstances, but if you caught the break of this neckline, you could have had a very good trade going down. And if I go out to the 1-hour chart, we had another double bottom, right? Oops. Sorry, that's not what I want. It thinks I'm making a trade. Good thing it's a demo account. Another double bottom here. It was short-lived, but if you followed the rules and broke the neckline resistance, you could have got that trade there. Obviously, again, right now, fundamentals are driving gold far more than technicals are. So we will need to see the markets calm down a bit and pray that we clear this coronavirus. So if we can look back on gold, and we can see quite a few opportunities. In fact, if you look at a situation like this where price shot up dramatically, this is probably based on some geopolitical event, and I've seen these over and over again when one country has a bombing or attacks someone or seizes an oil tanker. These little events can be great opportunities. You just need to ride out, be very careful with support and resistance risk management, and eventually the price will come back down again. And that's a clear example where gold shot up based on bad news and came back down when the situation calmed down again. And you've also probably seen me talk a lot about gap trading. And here's a clear example. Gold gapped for whatever reason. I could look on the calendar. This is earlier, back in the end of January. For whatever reason, eventually it came back down. And again, if you were paying attention, you would have seen the same situation, a descending triangle. So we have a gap to fill and we have a descending triangle to break, and it worked perfectly. So that, again, trading gold on technical analysis. I like to see gaps as both fundamental and technical. The gap is caused by a fundamental event, and it is almost fixed by technical trading and technical price action. So gaps don't always get filled. You have to be careful. If a gap generally jumps previous support and resistance, then you have to be very careful that you have to see it break that resistance or support before you get into the trade. Okay, I think I've covered everything I need to. It's, again, trading gold can be a simple subject, but unfortunately the current market conditions have made it somewhat complicated. I'll change my screen back. And does anyone have any questions? This webinar will be available for viewing as a recording on the Value Trades website. And I encourage you to follow us every Monday and Tuesday morning for our market blast, and of course follow Stuart McPhee's blogs throughout the week, and he generally talks about gold and what's happening with gold. And I'd just like to see if there are any questions that we can answer for you during this webinar. If not, please feel free to send Value Trades an email, and we'll happily get back to you. Okay, with no further ado, we'll look forward to seeing you on the next webinar, and happy trading, and be very careful.